think we already had the correction in gold. I think the event you talked about when the Dow, Nasdaq, and S&P dropped sharply, and then Trump reversed the reciprocal tariffs for 90 days. We saw that huge rally. So before that rally, gold had taken a hit, and silver, and they rebounded very quickly. I think this is it now, because as we speak here, I'll just have a look. The Dow is down 980 points and gold is up 86. Even silver, which is being kept suppressed by the bullion banks, is up 10 cents.
The speaker, Mario Innecco, recalls a past market event where stocks like the Dow, Nasdaq, and S&P dropped sharply, prompting Trump to pause reciprocal tariffs, which triggered a strong market rebound. Before that rally, gold and silver had dipped, but quickly recovered. The speaker believes we're at a turning point. While the Dow is currently down 980 points, gold is up $86, and even silver, despite being suppressed by bullion banks, is showing gains, up 10 cents. The speaker, Mario Innecco, a well-known financial commentator and precious metals advocate, believes gold will play a key role in a future monetary realignment, as it has during past collapses of fiat currency systems. He highlights Trump's recent comments about needing gold to call the shots in negotiations, interpreting it as a significant signal that gold is regaining importance. In the short term, a weaker dollar can support higher gold prices. Still, the speaker argues that the dollar index, designed in 1973 to track the dollar against other major fiat currencies, is essentially a distraction. While the index has only declined slightly over the decades, from 100 to around 98, gold has surged from about $85 to over $3,500 simultaneously. The speaker emphasizes that comparing fiat currencies to one another masks the real issue. They all lose value over time. Mario Innecco believes the focus should be on gold's long-term performance, which reveals the more profound decline of purchasing power across all fiat systems. Central banks and elites have aggressively bought gold, indicating they foresee significant changes. The speaker also mentions Triffin's dilemma, which explains how using a fiat currency like the US dollar as the global reserve leads to trade imbalances, something gold, being neutral and apolitical, could help resolve. Let's jump into the video for more details. If you like what you see, please thumbs up and subscribe to our channel to stay updated with our latest content.
Could go to at least 1-to-1. If you look back at the early 30s and then 1980, we had the Dow gold ratio go down to 2 roughly in 1932 or 33. And then in 1980, it went 1-to-1. Gold was 850. The Dow was at 850. So we could even have that ratio going like less than 1, which would mean, for example, you could buy 1 Dow with half an ounce of gold. Yes, we reached like over 40 in late 1999, and it's never retouched or retouched that level. I think we already had the correction in gold. I think the event you talked about when the Dow, Nasdaq, and S&P dropped sharply, and then Trump reversed the reciprocal tariffs for 90 days. We saw that huge rally. So before that rally, gold had taken a hit, and silver, and they rebounded very quickly. I think this is it now, because as we speak here, I'll just have a look. The Dow is down 980 points and gold is up 86. Even silver, which is being kept suppressed by the bullion banks, is up 10 cents. I mean, it was up a lot more earlier, but yeah, so Yeah, that's the way I see it. The Dow Gold ratio, that's an important one as well. And it's not only me who sees that. It's like people like Pierre Lassonde. He thinks is going back to 1-to-1. Let's say the precious metals retail market is where you live. But I do expect pullbacks. Markets never go up in a straight line. But I think gold and silver and commodities in general, they're going to become more like the stock market has been for the last 40 years. People always buy the dip. It's going to be the same thing for gold, silver, the miners. And yes, if you have the chance to add on to gold and silver, if we see a pullback, and your dealer might not even have a very good price, he might even have, or she might have a premium for you to pay. I mean, trading is different, of course, because some people leverage trading. I don't really recommend trading gold and silver, because I think what it's reflecting is the system breaking down, the currency system breaking down, and the emotion that we have for gold right now might be a bit greed, but I think when fear kicks in as well, when people realize that their fiat currencies, be it the dollar, the pound, the euro, the Australian dollar, or whatever, when they realize that these currencies are becoming worth less and less, they're going to try to jump into gold. And I think right now it's still the wholesale market that's jumping into gold. Central banks and sovereign nations and big money is jumping into gold. I think the smart money. I think the only way the gold bull market could be reversed would be for central banks to act together and say one day all the central banks start raising rates aggressively, stop QE, and also governments getting together and saying we're not going to spend anymore, no deficit spending. But I can't see that happening. We saw the ECB cut rates last week. We're seeing President Trump criticizing the chairman of the Federal Reserve, calling him too late Jerome or whatever, that he needs to cut rates. We're seeing the markets discount several rate cuts already. So yeah, I don't see any end in sight. And eventually, I think the public and investors are going to wake up and realize that there's no end to the inflation. And that's what Ludwig von Mises called the moment where the crack-up boom, or the flight to hard assets or hyperinflation, that's when it starts. And when it starts, if you're not protected, if you haven't protected your assets with or your wealth with hard assets like gold, silver, it will be too late. So that's why I don't think it pays to be too cute wait for pullbacks right now in gold and silver. I would just say, if you're fortunate enough to have spare fiat currency savings, and you're looking to buy gold and silver, do it. And I wouldn't sell my gold to buy silver. I would just buy both. Maybe if you favor silver, buy a bit more silver. I guess in the short term, it does help gold go up versus the dollar. But if you look at the price of gold in euros and pounds and yen, that's still really high as well, and it's made a new all-time high versus the pound today. And if you look at the dollar index historically, it was an index created in 1973 to measure the dollar versus the major Western currencies, because up until 1973, Elijah, all currencies were had a fixed rate versus the dollar, and the dollar was fixed versus gold. But yeah, it started out at 100 in 1973, and we're around 98 right now, so it's lost 2% in 52 years. While gold, I think, was 85 when the dollar index started trading. So I think, yes, in the short term, it does impact gold. But I think overall, I think it's a huge distraction, because it's measuring fiat currencies against each other. And we know, Elijah, that they all end up going to zero. And even if you look back at 2008, when the dollar index bottomed just above 70, gold was at 1,000. And here we are almost at 100, and gold is at 3,400. So yeah, that's how I see the dollar index. Trump said yesterday about needing gold to sit down at the table to negotiate and calling the shots. I think that's a huge signal that you and I value, but the general public has no clue what it means. And so, yeah, I think definitely gold will be part of a new monetary realignment. It always has been historically when systems collapse, especially fiat currency systems collapse. And I think that's why the world's been buying gold hand over fist for the last 3.5, 4 years. And that's why all the physical gold is going into the U.S., the people in the know. So, I do definitely see gold coming back, because having the dollar, the paper dollar, as the major reserve currency will only make the trade situation worse because of Triffin's dilemma. And Triffin's dilemma says that if you have a fiat currency that's the major reserve currency, then all countries are going to try to earn that fiat currency. They're going to try to sell their goods and services to you, and that country will always have a current account and a trade deficit. But with gold is neutral, so gold is apolitical. So I think we definitely need gold, and I think the Trump administration and the rest of the world realize that.
Mario Innecco presents a compelling case that the global financial system is at a tipping point, with gold poised to reclaim a central role in monetary policy and wealth preservation. As confidence in fiat currencies weakens and geopolitical tensions rise, the renewed focus on gold by central banks, elites, and influential leaders signals a shift toward hard assets as a hedge against instability. Could a gold-backed system realistically be implemented in today's global economy? How might individual investors best prepare for a potential monetary reset involving gold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos.